Welcome back, investors, to Ticker Time News. I'm Adam, and social media stocks are slipping again in after hours thanks to their special pal, Snap. And why is Snap dropping 26% in the after hours and pulling down other social media stocks with it? Well, Snap posted its most disappointing revenue growth rate ever. Snap posted 6% sales growth as it wrestled with the well-documented ad industry recession and its worst quarterly growth number and short of the 6.4% expectation. Plus, to top it all off, Snap is not releasing guidance for the next quarter because Snap itself doesn't know how deep this recession is going to go. As you can see here on the chart, bottom right corner, the stock is down 0.6% on the day, but 26.78% just in after hours trading. Good gosh, this is horrible. Now, it is taking down other social media stocks with it. At least in 2022, when Snap moves, oh man, boy, oh boy, do other social media stocks move too? Similar because of their dependence on the overall ad ecosystem. So Alphabet, it's down 2.5%. Meta Platforms is taking it the worst, down about 5%. Twitter, on the other hand, which has been enjoying some gains as Elon Musk $54.20 a share deal looks closer to reality than ever before. It's only down about 0.2% so far. Although there is a recent report out this evening stating that Elon Musk may fire or let go about 75% of Twitter's overall workforce. So we've got that to deal with. Then Pinterest. Oh boy, Pinterest. Pinterest often sees higher moves in either direction than its other ad exposed peers. Its stock is down about 8% right now in the after hours. So not a good evening for social media stocks. How is it going? I'm so done with this UK drama. Oh my goodness. Yes, the UK just cannot get it together right now. Wow. Their prime minister on the job for about 6 weeks is calling it quits. My goodness. I don't know, which is I don't know. I just don't know. Reality can be twisted in its own cranky way sometimes, and it's twisted right now, especially in the UK. It's almost like the UK is in the upside down, trying to find its way out and save its country from some fiscal or financial doom. It's getting bad. It's getting real bad over in the UK. And unfortunately, sometimes what we see in the UK, we see here months later on a smaller scale, of course, because our economy is so much bigger. So it's not looking that good for Western economies. Man, oh man. Wow. Plus, one of the bad things right now, it's the chop. It's the chop. The chop is what is making investors feel frustrated, right? Like, oh, I can't make the right call at all. And it's all because of that chop. All right, I'm going to go into the I'm going to go into the 15-minute view here for the SPX. Yes, that was a Stranger Things reference to the Upside Down. Thank you for catching that. Yeah, I like that show. Let's see here. Let me throw this one up real quick. I got thrown around this week too because of the UK. Yes, absolutely. And then here we go. The Stranger Things reference to the Upside Down. Awesome. Here, I want to show you this. The 15-minute time frame. I'm just going to look at this week, okay? Just this week. There is a yellow box highlighting this week on the screen right here. And that yellow box, that is the chop box. The chop box. That's what I'm going to call it. That's the chop box. All we've done all week is gone nowhere. But, hold on. I want to put this into a little bit of perspective here, because remember, and I've said this before, it's been a few weeks since I've said it, I believe, but remember the market cycle of expansion leads to contraction, contraction leads to expansion, over and over and over again. So right now, we're in the cycle of contraction, right? And that's when you get the chop around. That's when you get that spring. If you push that spring down and that spring gets all coiled up and bunch of pressure underneath of it, then that spring will, it'll snap, right? And it'll fly up in the air. That's what's happening right now. This market is getting coiled up like a spring being compressed as we are in this phase, and it's gonna let loose. The question is, which way will it let loose? Will it let loose to the upside or downside? Because that is coming next. We're gonna get a move, and a pretty big one, I would say. Okay, look at this chop box that we're in right here. We started this week, obviously, going from Friday into Monday with a gap up. Everything looked great, sunshine and rainbows. Everybody was saying, here comes the rally. I even thought the rally was possible, okay? Because we were in a bit of an oversold condition at that point. And then we moved sideways. Then on Tuesday, we have another major gap up. But then we just sell off and we give it all back. And then we chop around. And then we go lower throughout the middle of Wednesday. We kind of come back up Wednesday afternoon for some air here. And then we shoot up this morning only to sell off for the rest of the day. Now, I did this morning, like I talked about a couple times this week. This morning, I did open up a short position when we were at these highs up here. We were above this purple line, which is the weekly expected move. And like I pointed out, I don't remember if it was Tuesday or Wednesday. It might have even been yesterday when I talked about it. But that purple line, you can see all the interactions with that purple line, which is the upper end of the weekly expected move. Now, 68% of the time, this is how it's supposed to work. When price action takes you above that line or on the bottom line, if it takes you outside on that bottom line or outside on the top line, 68% of the time, it'll be back inside of it by the close of business on Friday. So I did open up a short position right here, and I rode this down. I left it open. I did not close it. I don't know. I don't know which way this bounce is going to go. We could get a bounce to the upside. That is possible. And we could just as easily get one to the downside. So I do have a short position open right now. I left it open at the close of today. We'll see if I get chopped out. As we were coming down today, I was moving my stop loss down with it. I typically use a trailing stop loss. But right now, we're getting these quick moves, and they're, look at that yellow box. I mean, where we started Monday, we're just a little bit below that right now. So I didn't want to use a trailing stop loss because we're not like on a bull run or not a swing trade in the sense that we're going to ride this for a couple weeks and see how high it goes. So I was moving my stop loss down as the market went down too, to keep that risk really tight. Okay. So right now my stop loss, there's this, let me go back to the daily view here real quick. And I want to show you what I have this set at. Let me clean this chart up real quick so it's not too interfering as we go back to the daily view. But I set an anchored VWAP, and I'll show you what that is and how it works here in just a moment if you don't use it already. I want to open this up, and I'm going to take you back to the 1st of October, which was also the beginning of the 4th quarter. So here we go. Chart's moving nice and quick today. I like it. All right, open it up just a little bit more. Okay. On October the 3rd, there is an anchored VWAP there, and there's a red line. I know it's hard to see. So the red line starts at the open for October the 3rd. It rides up like this, and it comes back down, and then it kind of moved sideways like this. So that's like the path that it's taking. Now, the anchored VWAP in TradingView over here on the left-hand side where you have all your tools, the second one down, when you click that and it expands all the way down, is your anchored VWAP, okay? You can anchor this moving average to any day you want, and you can set it up so, and here, I'll do this. I'll click on it, and let's just pick a place to anchor it. I'm going to pick the high. What should I pick? Let's pick the high of October, which was October the 4th. So I'm going to click it. Okay. Now, that moving average is anchored to the high of October. And then I have a second one anchored to the 1st of October, which is October the 3rd, Monday, October the 3rd. Now, I'm going to go into the 15-minute view here. Okay, and I got to clean this up a little bit. Go, that short position is going to print. I hope it does. I hope it does. Okay, so there are two red lines. Both of those anchored VWAPs are red lines. There is a red line coming across the screen, and it's got these little dots, these white dots. They're blue circles filled in with white. Those dots right there are the anchored VWAP that I just set to the high of October. Now, I'm going to click on this other anchored VWAP, okay? This is anchored to the 3rd of October, which was the beginning of the month, but it's also the beginning of the quarter. And if you notice, both of those anchored VWAPs, all right, as they come from the left side of the screen here, there is a separation between them, okay? But as we're moving forward here along this line, they both converge, right? And right now, both of them are together. Now, I want you to notice something, okay? Yesterday, that anchored VWAP acted as support, okay? As I open this up a little bit here to look at yesterday and today, you can see yesterday, which was this dash blue line here, it was support. And then today, when price was coming down, it used that as support for 3 of the 15-minute time frames. So 3 of those candles, it was support. Then at the end of the day, it used it as resistance and resistance. So this is the reason why I kept the short position opened overnight, because that VWAP that was anchored to October the 3rd, which was the first trading session of October and the first trading session of a brand new quarter. Since it flopped and now it's using it as resistance, that's the sole reason why I left it open, okay? Why I left that short position opened, okay? And it's a short position on SPX. That's why. Of course, I'm feeling a little more bearish about the market right now because of this price action, this coiling up, and the bounce that we're going to get out of it, the expansion move that we're going to get out of it. It's going to go one way or the other. And right now I'm leaning towards a little bit more on the bearish side, even though we are having some good earnings reports out there. It seems like this market has tunnel vision and it's only moving on the treasury market or Fed policy or what's happening in the UK. It does not seem to be completely wide open to the market and the fundamentals that drive or are supposed to drive the market, which right now earnings should be driving this market. But the treasury market seems to have more influence over this market than the fundamentals from company earnings. So just a couple of my thought processes there. Thought processes there for what I'm doing here with this short position and why I'm doing it. So I'll leave both those anchored VWAPs up here. And again, if you don't have TradingView yet, there is a link in the description. You can sign up. It doesn't cost a penny, but some of their advanced features, they do have a tiered subscription service for that. So there you have it. The beginning of this week, that anchored VWAP acted as support right there. It acted as support yesterday. Once it broke that support today, I felt pretty confident that when it went up and kind of back tested and found resistance there multiple times today, that I feel pretty confident that it's going to continue to find resistance there. Now, I'm not always right. I do get things wrong sometimes. But at least I'm telling you what I've got right now and why I'm doing it. All right, let's keep moving here. Where do I want to go? Let's talk about this market here for just a little bit more. Specifically, what went on today. Let's change this up to the 5-minute chart, and I'm going to go to the SPY here, okay? Now, on the SPY, you will see a new trend line. Did I put it here? I thought I did. Let me open this up. No, I added it to the queues. My apologies. Let me go to no, I'll leave it here on the SPY for just a quick moment. How far out? Let me see. Let me put this up here before I go. How far out do you buy your SPX contracts? I went 2 weeks on this one. 2 weeks today. I don't know if that's long enough. I could have went longer, but I am concerned about the what could happen after the midterm elections. So 2 weeks, basically the end of this month, is how long. And the reason why that time period is because of the midterm elections. That's the only reason why. And if we look at just real quick, I'll pull this up. I know many of you are probably sick of seeing this seasonality chart, but there something happens here. Again, it's the red line that we need to follow. Mid-October, we are supposed to hit a new low for the year, maybe towards the 3rd week or towards the end of October. Again, the timing of this can be off like a week or two. It's not always spot on to the week here. But with that said, we did hit a new low for October already. But I don't know if that is the low for the year just yet, because there are a couple of bullish indicators in the market, but there's not a lot. There's quite a bit more bearish in my mind for what I'm seeing. So we do have this. However, we do have this rally that after hitting this new low for the year, and it's the low for the year, we have a rally into the midterm elections. And then once we get to the midterm elections and they're over with, there's like this sell-off period throughout November, or at the very least, a very choppy moment throughout November that seems to be in a is in a downward move, but very choppy, before we get towards December and we kind of rally into the close of 2022, leaving the year at a loss. All right, leaving 2022 down 2.5, 3 percentage points. So that's a pretty big loss for the whole year for the S&P 500. So there's a couple of things that I'm looking at here that say we need to be cautious, right? Around midterm elections, we need to be cautious. So looking at the SPY here, this is today, Wednesday, Tuesday, and let me squeeze Monday on here to get the full week's worth. Again, that big move up the Monday morning before the market opened. We're down now to that gap. So this is something else too. Get my highlighter. Since we are really close to where the market gapped up to Monday morning, and we have now this gap right here, could this gap get filled, right? If something cuts loose, right, and we don't find support down here for the SPY, which is right around 365, 364, if we break that, then, and again, that lines up with this support here Monday morning. If we break that 365, 364 support there on the SPY, what's to stop us from then going down and filling this gap, right? This gap right here. What's to stop us from just completely going down and filling that gap? Nothing. Nothing is. So that's another reason you could add to a little list here that we're building of reasons why it's looking a little bit more bearish. But I do want to stress, though, that the support that, let's clean this up just a little bit. The support today that lines right up with that support we had on Monday, we need to watch that very carefully. We're sitting at 365 right now. So if we break down 364, 363, then we could be done with. The only other thing that I would watch as far as a possible support area is on Monday when we were sticking underneath this trend line here. And when we go back to the daily view on the SPY, you'll see this trend line a little clearer. Once we broke that, we could come back down and test support of this trend line. Okay, but still, that would be a move lower from where we are now. If we just go forward to tomorrow morning, let me crank this over just a little bit more. Tomorrow morning, that's right about 362 on the SPY. So 362 as we move throughout the day, it's still in the 362s. As we get into the noon time, it might drop down to 261 by the close. Yeah, it does. It drops down to 261 by the close. So we got this trend line here to also contend with as well on the SPY and also on the SPX. When we go to the Qs, I'll show you how that is starting to stack up. Chop is tough. Let's pull this up on the screen here so everybody can see it. Chop is tough, but today was able to scalp $900 on Tesla early this morning in the up move. Good job. Good job indeed. Yeah, the chop, there is trading strategies that you can use in this chop that work. Scalping is one of them, right? And if you have a small account, you only have a few $1,000s or whatever it may be, and you can't day trade because of that limit, then you typically have like 3 day trades you can do within a 7-period rolling time frame, or a 5-session rolling time frame, I believe it is. But even on a small account, you can at least scalp 3 times in a week, and they can work out pretty well. And scalps are just real quick trades, right? You want to ride U-turns, buy at the bottom, put your stop loss, and once it reaches that top, then you cut it loose and you take your profit at that point. But there's a lot of there's some strategies that you can use when it is a small account. Cash account is the key for a small account. Yeah, it is. I think with Robinhood, I don't even know if can you do margin? Yeah, I guess you could do margin with a small account. I'm not 100% sure what Robinhood would do, and I have no idea why Robinhood just popped into my mind, but it did. Okay, SPX here, obviously, choppy session. We've been talking about that. PDT is very unfair. It is. It's almost, the whole day trader thing. I think the reason why it has that limit is new investors. Maybe they only have a few $100 that they can put into an investing account, or a few $1,000s. It doesn't matter what the dollar amount is. But the reason why I think that rule is there is to try to help the small trader from making big mistakes, and losing it all. But on the other hand, on the flip side of that, I don't want small accounts to get penalized just because they're a small account. That's not right. I don't think that's fair. But new investors, they may, especially in 2020, they hop on a meme stock. It jumps up 200% in a day, and they're like, "Oh yeah, let's diving into it," feeling that rush, and then it all of a sudden drops. They've already used up their 3-day trades that they can do within a 5-session rolling time there, and then it starts to go negative. Then they're stuck. They could end up losing 200% instead of making 200 or 500% or whatever the meme stock did. So, that's like an unfair penalty to the new trader. You should allow them, I would think, to get out of that trade, if they've used up all of their day trades. And then, maybe if the rule has to stand, maybe just put a hold on the count like Webull does. Webull doesn't allow you to have the 3 trades like Robinhood does. They have to they make you wait 2 days. Like, you can do a day trade, but then if you get back into a trade on the same day with that same money, then they make you wait in that account for whatever equity you just bought, or crypto. I don't think crypto works the same. Whatever equity you just bought, or ETF, whatever the case may be, then you're stuck there holding it for 2 days. So there's a lot of minefields out there that can hurt smaller accounts that bigger accounts don't have to deal with. And I just wish it was all equal across the board. Definitely do. Okay, moving on here with the market. Just real quick, I'll just run through what I have here. Lackluster day to start this morning, definitely. Went into rally mode as the Treasury market, especially the 10-year, the longer dated yield, pulled back from its overnight high of 4.18%. And the S&P 500, it found support about the 3,700 level. So for the SPY here, you can see it found that support about 365, 364. But this morning, that support was up near 370. That's why it was 3,700 for the S&P 500 this morning. Now, the stock market quickly shifted into retreat mode as the 10-year started to climb, ultimately settling at a fresh high for the year. I can't believe I'm saying this. We just talked about it yesterday. The 10-year hasn't been this high since 2008. It settled today at 4.32%. The market is the equity market is moving based on what the 10-year and 2-year are doing in the bond market. It's just what? So the Treasury market, it reacted, which then caused the equity market to react to Philadelphia Fed President Harker, I believe it is, and he is a 2023 FOMC voter. So he's not voting now, but he will be voting when it gets more critical, when we're facing a deeper recession. But he said that he expects the Fed funds rate to be well above 4% by the end of the year. Can you imagine? Just a month ago, we were talking about at the end of 2022, the Fed funds rate being at just over 4%. Now we're looking closer to 5%. I can't believe I'm saying that out loud. Oh boy. But he did feel like the lack of progress the Fed seemed to be making with core CPI number going up as a problem for the Fed, and they've got to get tougher on fighting inflation. Well, they're already pretty darn tough. How much tougher can they get? Obviously, tougher still. Now, that view ignited renewed selling pressure in the 10-year Treasury. The 2-year, though, which is more sensitive to changes in the Fed funds rate, remember that. The 2-year is more sensitive to the Fed's rate hikes, while the 10-year is more sensitive to inflation and growth concerns. So remember to keep that in mind and separate the two in that way. But with the changes in the Fed funds futures rate, it had a more mild reaction as the Fed funds futures market was already positioned for a Fed funds rate well above 4% by the end of the year. Still, the 2-year settled at a fresh high for the year at 4.6%. Where's the limit in the Treasury market? Is there a limit to how high these yields can go? Well, the quick answer is no. There is no limit. As long as yields keep rising, equities will remain under pressure. Now, market breadth reflected broad selling interest today. Decliners led advancers by a greater than 2-to-1 margin at the New York Stock Exchange, but a 3-to-1 margin at the NASDAQ. What did we get? We got 0.8% decline in the SPY, but only a 0.5% decline in the Qs. It was the small caps IWM down 1.3% on the day. The small caps had it rough. They usually do get hit first, but they're also sometimes the first to recover. They can have some pretty big moves, especially because of their open interest and short squeezes and like you know, that whole shtick. Now, there were some bright spots in the market today, and they were driven by better than expected quarterly earnings results. Notably, a big price gain was at AT&T. Ticker symbol is T. They were up 7.7%, and that helped to boost the S&P 500 communication services sector. Ticker symbol XLC. It was up 0.4%, and that was first place on the day, 0.4%. But it was positive, not negative like the indice was. The information technology sector, XLK, was up 0.1%. That held up better than the broader market too, thanks to post-earnings responses in IBM up 4.7% and Lam Research, ticker symbol LRCX, up 7.8%. Now, Lam Research also helped to boost a semiconductor ETF, SMH. As a matter of fact, let's just clean this chart up here. I'll come back to the Qs and we'll talk about, I got the anchored VWAP on the Qs as well, and I'll show you where that's at. Real quick, let me just go to, almost got the chart cleaned up. Almost there. Okay, there. Let's go to, oh, what did I click on now? All right, daily view, and the ticker is SMH, and that's the Van Erik Semiconductor ETF. It closed up 0.8%, the complete opposite of where the SPY ended the day. And that was thanks to Lam Research. Let's open this up some here. Give me just a quick second. Let me bring this up out of the volume candles down there. Now, with the semiconductor ETF here, up 0.8%, flat in the after hours. It's got a bit of a doji candle here because there's no candle. It's like all wick, right? If the candle was a little bit bigger, I might say that this was a inverted hammer candle, which is a reversal pattern, meaning it hit the top and tomorrow it's going to come down. But it did hit its 20-day moving average and it found resistance there. Now, if I stretch this trend line, this blue trend line down a little bit further, you can see that it is now remaining well within that trend line. And that has, or that was, let me refresh this here. That trend line or trading channel, it has been with us since the highs back in, well, the highs here were back in December. But this trading channel really kicked off in January, and it held all the way until the summer rally with all of the talk in Congress about giving money to semiconductor companies. Since then, though, it's fallen off. But today was at least a bright spot for semiconductors. Meanwhile, consumer discretionary, XLY, it was down 1.7%, and it closed near the bottom of the pack thanks to heavy selling in Tesla. Let's pull it up. TSLA for Tesla. Tesla finished the day down 6.7%. To be expected. Let's open this up a little bit here so we can see a little bit better. I'm going to go to the 15-minute chart here too on Tesla. Come on up. So Tesla is like right there in the middle of its weekly expected move now. I expect it's going to close squarely within that weekly expected move. All right, here's the 15-minute time frame for Tesla. Let's just look at this week, though. Tesla falling. It fell over 5% in after hours yesterday, but after hours activity doesn't get picked up till the next day. So that's why we've got that open all the way down low. But you can see Tesla did catch a bid after this morning. The first 15 minutes, Tesla lost 8.2%. Now, that includes the 5% from the after hours yesterday, right? But 8.2%, Tesla caught a bid and it ran up to about 11:15 or so. So if you were able to do a scalp trade like IFR Fun did in the chat there, and I'll just throw that back up here again. This is where you could have made a day trade and it work in your favor, right? We had that inverted hammer candle, which is a signal that we've reached a bottom here and we're going to roll over, right? Okay, so that was the predictor. And then the next hour or so, we had a nice run, hour and 15 minutes or so. A nice run. That would have been a nice day trade right there. And to measure this, let's just go from the bottom of that swing candle to the top. Oh, come on. Measure for me here. From the bottom of that swing candle, and if we measure up to the top, I'm just going to go to the top of the candle, not the wick, because your stop loss should have stopped you out by that time. That is a 5.6% gain in about a hour and a half to 2 hour days of work. So that was a nice trade for Tesla. And this is the reason why you keep your stop loss tight, okay? Whether you're using a trailing stop loss or you are moving that stop loss up with it, or whatever the case may be, keep that stop loss tight. You want to manage your risk, and you don't want to give up any gains that you've not occurred. Why am I? Anyways, I'm missing that word from my vocabulary right now. Any gains that you've racked up, you don't want to lose them. So keep that trailing stop loss or move your stop loss up. Keep it tight. All right. That's when you don't want to miss out. Now, let's clean this up a little bit here. Tesla, it found resistance at the end of the day, which, to point out, Monday's gap that was made right here, this gap just above my head, that gap was filled with today's price action in Tesla. Now, that is something that could occur on the SPY or the SPX, potentially. We do have that gap that could be filled, all right? We pointed that out when we looked at the SPY on the 15-minute chart. Okay, so Tesla, why was it down on the day? Well, according to analysts, it missed Q3 revenue expectations. Now, to be fair, Tesla said it sees excellent demand in the fourth quarter. And Elon Musk himself said the Q4, or said Q4 could be a huge quarter. Okay, so that could be, depending on where the stock goes from now till then, which would be which would be January, there could be a trade set up there. But again, it just depends on where the stock goes. If Q4 is huge and the stock is down from this point, that could be a nice trade set up for earnings. But again, that's many weeks off, a few months off, actually. So just something to keep in the back of your mind. Now, energy complex futures, they settled mixed today. Let's look at oil. USOIL as the ticker on TradingView. WTI crude oil futures rose 0.1% to $84.49 a barrel. But natural gas futures they fell 1.5% on the day. Okay, so we've got oil. It's kind of stable in this pattern, which is much like what's happening right now. Expansion leads to contraction. So we've got expansion and now we've got contraction, which will lead to expansion. Which way is oil going to go? Down or up? Well, if it's OPEC Plus's choice, it's going to go back up. But obviously, we'll have to wait and see how that plays out. Also, what's President Biden going to do? Release more oil from the strategic reserve, which is what, at its lowest level in like 40 years or something like that, I think I read, which isn't good. What if we have an emergency and we need it for an emergency, right? What if China invades Taiwan and all of a sudden we need that reserve? Oh, well, just thoughts. But while we're on the topic of oil, I know I've talked about it a couple of days now. I want to look at ExxonMobil, XOM. ExxonMobil has been our number one momentum stock pick for the past 3 weeks. Looking at the chart, you can see why. It was up, not very much, but it was up 0.13% today. The overall market was down today. So that's a win, no matter how small. I'll be curious to see how it ends the week. If oil moves up, it's moving up too. However, if you look at a longer term picture here over, let's say, the high of October, which in the market was about October 4th, ExxonMobil has continued to go up. It went through a contraction phase and then it's moved on to an expansion phase now. However, earnings are coming up and earnings could be a sell the news play. So be careful with the profits that oil companies like ExxonMobil are bringing in, okay? Just be careful of that. All right, and another note, I gotta say it. I mentioned it at the beginning, but I want to say it again so that way everyone watching can hear it. In the UK, Liz Truss, the Prime Minister, announced her resignation after 6 weeks on the job. 6 weeks. And she quit. What's that about? What is that about? Now, she's going to stay on until leadership has an election to replace the prime minister. But I believe that will take place next week. So depending on who is elected or appointed or however it works in the UK for the prime minister, it's going to be interesting to see how the market digests whoever this new person is, right? I just want to warn you about that one. So that could cause a doozy in the market next week. Now, looking at today's economic data, and then I'll look at the Qs and the IWM to point out the same things that we pointed out with the SPX and the SPY. We got weekly initial claims. They came in at 214,000. The expectation was 233,000. That should have been a positive for the market. Unfortunately, the market doesn't seem to be moving off of the fundamentals of the market. They're more worried about what the Treasury market does or what Fed policy does. Weekly continuing claims, they were at 1.385 million. The key takeaway here is that it does cover the week in which the survey for the October employment report was conducted. So the low level of initial claims will feed into expectations for another solid increase in non-farm payrolls. In turn, it's going to drive up the belief that the Fed will stay aggressive with its rate hikes as usual. I'm not saying, and I have not said, that the Fed is going to pivot or even slow down their rate hikes in 2022. I have said for months that the Fed is going to hike rates all the way to the end of 2022 and into 2023. This just helps to support that narrative. Now, the October Philadelphia Fed index was a negative 8.7. The expectation was a negative 5. The prior reading was a negative 9.9 in September. So a small improvement in that. Now, another one that is important to the housing industry, okay? The housing market. This is a market that is sitting on a pedestal where one leg is missing. And you know, a pedestal with one leg missing is wobbly. September existing home sales came in at 4.71 million. The expectation was 4.7 million. The key takeaway is that higher mortgage rates are taking a bite out of existing home sales, having created affordability pressures for prospective buyers and deferring listing decisions for potential sellers who see a very expensive repurchase proposition. It's just a matter of time before the housing market truly falls. Now, ahead of tomorrow's open, we've got Verizon, HCA, and American Express all headlining earnings reports. Now, there's no significant U.S. economic data tomorrow. So what's going to be driving the markets tomorrow? Well, what's been driving the markets all week? The Treasury market and Fed policy. What else would I say, right? But hopefully a sprinkle of earnings reports will bring us back to using at least some fundamentals of companies' earnings to actually drive the market. While I'm hopeful, it seems unlikely. However, we did see a few sectors' performance driven by price action from earnings today, especially from stocks like Tesla, IBM, and Lam Research. So, a little hope sprinkled in. All right, let's look at the Qs and the IWM, and then I'll wrap this up or leave it to incurred. That's, oh, I missed that comment. I should have caught that earlier. Incurred, thank you. My brain was broke for a moment. Okay, QQQs. Let's open this up. I do have the anchored VWAP here attached. So a little bit more. Let's bring this up out of the weeds. A little bit further. All right. Now, that anchored VWAP is on October the 3rd, okay, which is the first day of October and the first day of the new quarter. The anchored VWAP moved in the same direction, just like it did for the SPX, the S&P 500. This overarching because price went up, then price came down, and then it started to move flat, okay? Now, as we go into the 5-minute chart here, actually, I should have used the 15 minutes to keep things consistent. Let me switch it to the 15 here. All right, and then just through Monday for that gap up. Okay, now as I stop it here, so we've got Monday in here. The anchored VWAP, it's the red line, and it looks like it's straight, okay? It came through here, acted as support. Here, price didn't know what to do with it, but then it acted as support when it retested it. Here, resistance, it tried to break it, but didn't quite do it. Resistance again, then broke through it. Found support for a little bit today coming down, but then ended the day just like the SPY, the SPX, as resistance. So that's looking negative for tomorrow. Plus, we have that, I need to extend it, but we have this line right here, which isn't supposed to be as wobbly. That could act as an area of support. However, with the gap left from Monday, that's open. The door is open for that gap to get filled. But first, we do have for the Qs this area here, again right there, and again right here from Monday as support. And that is at 267 to 265. Okay. Well, no, not 265. 267. Yeah, right around 267, the whole 100 points worth there, or the whole dollar. 267, that's got to be support. It's at 269 right now. If it breaks that 267, that's where we're looking to see how it's going to interact with the trend line that's coming down. And if it's coming down that far, it might as well just continue and fill the gap. If it came all the way down to fill the gap, it would be about 261, which is over a $10 move from where it is right now. That would be a big move for Friday, but it could happen, right? It could absolutely happen. So again, that's what you need to watch. 267 for support. If 267 gets broke, then it could be headed down to the trend line, which if we look tomorrow right around the open, it's right around 264. Okay. So those are the two important price points to watch for the Q tomorrow to see if that gap fill does get filled somewhat tomorrow. All right, let me clean this up and then I'll go to IWM. If you've got any questions, now is a great time to answer them because after I look at the IWM, I've covered everything that I wanted to cover today. All right, let's pull this up. And we've got, I'm going to look at the dollar next too. I think the dollar is setting up for a move higher. Okay, so I do not have the anchored VWAP here, but let me do it. Let me do it for the IWM here. And again, you come up here. And once you've selected and used something from the toolbox, it'll always be available. So you can just click right there and use it. Going to October the 3rd. Clicking on it. And we've got the anchored VWAP. Now let's go to the 15-minute. And just want to get this week on here so far. Okay, right there. Now, the anchored VWAP, when the gap up occurred on Monday, it gapped right up and opened right on that VWAP, right on that anchored VWAP. And then we had the symmetrical triangle, which then on Tuesday morning, it broke out of, went sky high. And then it used the weekly expected move to kind of play around with on Tuesday before breaking down and finding resistance there. It also found resistance at the weekly expected move today. Now, the anchored VWAP yesterday afternoon, resistance before finally breaking above it right at the close, giving us a run this morning before finally just selling off after hitting resistance at the weekly expected move, right? So now this is under that VWAP big time. It's not close like the Qs or the SPY or SPX. So this, it could be already gone. And if we look at where support was, right, that support fills in half of the gap that was created on Monday. So we already have half the gap filled. It wouldn't take much. Tomorrow we could finish filling that gap. That's a possibility. And if you look over the past 3 sessions, what is the trend line here? The trend line is down, right? On the 15-minute time frame, the trend line is down. We're making lower highs and we're making lower lows. And just to show that channel right there. Lower highs and lower lows. That's not good. If you want it to go up, right? Okay. Do you think tech would be a good short tomorrow? All right, let's pull 2 things. Let's pull the dollar and then let's pull the 10-year and then we'll go to the Qs again, okay? First, let me clean this chart up. Almost there. One more. Okay. First, let's look at the dollar, right? Because when the dollar is strong, the market is weak. Right now, and I want to go to the daily view for this, not... Okay. The dollar right now looks to me like if we put this line right here and this line right here, to me it looks like the dollar is flagging, okay? And it's getting ready for a breakout. And if that breakout happens tomorrow, then the market will definitely be going down, okay? Because there is a very strong correlation to how the dollar moves, all right? And how equities move, how gold moves, how many other asset classes move. So a strong dollar, and just to set this off, let me just put the SPY here, SPY. Okay. I've done this before, and you can see that as this dollar has been gaining strength, when it goes up, the SPY goes down. When the dollar comes down, the SPY goes up. And it's just the same inverse correlation here. And then it comes, the dollar goes down, the SPY goes up. So this inverse correlation almost looks like I'm making a Christmas tree there sideways. This isn't good, right? So let me take that SPY off. So we have to be careful for the dollar here, right? We've got to watch what it's going to do. So let's clean this up a little bit. Oops, I didn't mean to do that. Now we'll go look at the 10-year. Because the dollar and the 10-year, US, the ticker symbol for the dollar, DXY. US 10Y. Do you think TLT can bounce for short term? I'll pull TLT up right after I pull up the Qs here. Now, with the 10-year, this thing has just been running, right? It is well off its 20-day moving average right now. It's disconnected from its 5-day EMA. So tomorrow, it needs to reconnect with that 5-day EMA. Now, that doesn't mean the 10-year is going to be down tomorrow. It could just be that the 10-year moves down in the morning, reconnects with that 5-day EMA, and then bounces off of that to go higher. That's a possible move. We have seen that move time and time again on the march higher for the 10-year. So we do have to be cautious about that. Now, if the dollar sits flat tomorrow and the 10-year pulls back, that could be a good spot for the Qs to go up. tomorrow. Okay, so these two things we need to pay attention to. Right now, the 5-day EMA for the 10-year is 4.14. It's at 4.22 right now. It is down 0.25% in the after hours, but that could just mean that it's going to move down in the morning to bounce off of 4.14 in the afternoon or late morning, or it's just going to be down tomorrow. So the dollar, the 10-year, that's what you need to watch for, and those are the points that you need to watch. Now, let's go look at the Qs. I want to go to the 15-minute time frame here, because the Qs right now, from their expansion move, they are moving. All right, here's our week. The Qs are very similar, excuse me, to the SPY right now and the SPX. If I put a box, okay, using support down there, and we can go up all the way to this high right here, which lines up with 2 sessions ago. This is a chop box. It is very possible that the Qs could dive tomorrow. If the 10-year goes up, if the dollar goes up, then the Qs will go down. Here's a couple things to point out for the Qs. Number one, that anchored VWAP, it was used as resistance at the end of today. Number two, the support level right here. Where'd my highlighter go? The support level that we need to watch right there. And again from Monday, that's at 267. If 267 gets broke, if the 10-year is going up, if the dollar is going up, and 267 gets broke as the Qs go down, I don't think there's much in the way to stop it from trying to fill as much of this gap as possible. Okay? So while I do not have a crystal ball, and I can't say for sure whether tomorrow would be a good day to short the Qs or not, at least these are the things, the dollar, the 10-year, the Qs, what you need to watch and what you need to watch for in order to make that trade. Not financial advice, though. Does that help? Let me know if that helps. Or I can dive into it maybe a little deeper in some way to help with that. But I think I gave you a pretty good idea of, oops, my assistant on my phone is going off. Stop, I don't want you to. All right, that's fixed. Okay. You say okay in its name, and then it starts to blink at you. Let me know if those parameters are, if you're good, if those parameters are enough to help you to decide which way you need to go tomorrow when the market opens. Now, again, like I said with the 10-year, the 10-year could pull down to reconnect with that 5-day EMA. The dollar could just move sideways, And that could give us a gap up tomorrow, maybe a gap up to the anchored VWAP, maybe above it, okay? However, if the 10-year then starts to rise, the dollar starts to rise, then we go down on the Qs. And then if the Qs break that 267, that's when Monday's gap could get filled, or get filled as much as possible within a day's time frame. Now, let's clear this chart up here. And then if we go to the daily view, you can see that box there, the yellow box. Let's click over there. Let's pull this up out of the weeds. Up you go. Up you go. Okay. Now, oh, one more thing also to point out is the trend line. But for the Qs, that trend line tomorrow is below where the gap fill would be for Monday. Okay, so also keep that in mind. That could be a stopping point if the gap does get filled. That's where it could get hung up. And tomorrow it looks like that's what would that possibly be? Maybe 264. Is that where that's where it looks like it would be at for tomorrow? About 264, maybe 263, the high 263s. Okay, good. All right, let's go to TLT. TLT I've talked about yesterday. It's gotten hammered. It is way down, and unfortunately, it's going to keep moving down, I think. I do think this is getting oversold in the short term, which, if this does bounce, that could be good for this is just so far down there. Looking at this, in the short term, today's candle got so far down there, it is disconnected from its 5-day EMA. And like I always say with that 5-day EMA, think of it as a circuit board, right? In order for that circuit to flow through, these candles need to be connected to the 5-day EMA. If it is not connected to that trend line, then it will connect almost the very next day in most cases. So it's disconnected. So in the very short term, like tomorrow morning possibly, this thing could shoot up to reconnect to that 5-day EMA. Once connected, though, then it could go anywhere. It doesn't have to stay that elevated. It could end up being a red day, just, opening a bit higher. But I do think it'll reconnect with that 5-day EMA tomorrow. It's really far off from it right now. And even yesterday wasn't connected with it. It is very rare for there to be 2 days, even a third day, disconnected from the 5-day EMA. And right now, that 5-day EMA is at 97.02. And TLT is at 94.88. So it's far off. Also, the weekly expected move, the lower end 98.19, means that, again, 68% of the time when we close Friday, let me get my highlighter back here. When we close on Friday, that candle is going to be back up in the weekly expected move 68% of the time. So that's two things making me think that in the very short term, maybe we could see a couple or a few green days here for TLT. That's very possible. But in the long run, the grand scheme of things, this is very bearish. Very bearish. Look at this downtrend that it's been in. And as that 10-year has just been accelerating, this has just been accelerating to the downside. Really bad. And TLT, when you're thinking about, when should I possibly go along on this thing, instead of just looking at short-term metrics, and I'll go to the 15-minute chart here in just a minute. When we are at the end of the business cycle, stocks don't do well, bonds don't do well. But once we get from the end of the cycle into the beginning of the cycle, bonds start to do better. So until we are clearly out of the last stage and clearly in the first stage of that business cycle or the market cycle, bonds are they're just going to continue to melt down like this. Okay. So until that comes, TLT is doomed to a certain extent, right? Of course, there's going to be the fluctuations. It's not just red all the way down. All right, looking at the 15-minute time frame here. Let's see here. I want to open it up to capture just this week. Almost there. All right. So, I mean, if you look at this just this week, and I will get a trend line to put on this. I shouldn't have tapped that yet. All right, hold on one quick second. Okay, now let's do it. If we attach to the top where it gapped up to Monday, and we just come down here to today, I mean, that's as clear cut as you can almost get. One little wobble here on Tuesday with a little bit of gain. So it's possible tomorrow what we saw on Tuesday, maybe we could get a little bout of this, but it all depends on so many other factors. If we get a move like this tomorrow morning, maybe we could get a move back up to tag this trend line. But it's just sitting on there. It all depends on how it's going to act tomorrow morning. If it just stays along this trend line, then it's liable to just continue moving down. But if we get a strong move down early on in the morning, we could get a bounce back up to that trend line. So it's just not looking good here. The only thing that I could say is looking good in a short-term sense is that this is oversold. The TLT is oversold. The RSI is already in the 20s. Let's see here. Jiminy Crickets, it's way down there. About a 24.6. So that's steep. That is steep. So, but when things are oversold like that, they can stay oversold for an extended period of time. Like when looking at the RSI, when it was just recently, when it dipped down and it tagged, about 29 or 30, it stayed there for several days before moving down any further. So oversold conditions can stay oversold, and oversold conditions can also lead to a stronger move down as capitulation happens. And in this market, we just have not seen capitulation take place yet. So over the real short term for TLT, we could get a bounce here. It is possible, only because we're oversold tremendously. We're disconnected from the 5-day EMA. We are below the weekly expected move. Those three things alone don't mean it's going to bounce, but at least those are three things on your side for a very short-term bounce for TLT. Longer term, we've got to get out of the ending cycle, the end of the cycle for the market cycle, and we got to get back to the beginning of the market cycle before we see TLT start to improve. But once we do get there, TLT will outperform the SPY when we get to that point. But we're just not there yet. So I personally would stay away from TLT for now. I'm not touching it, but I am keeping it as on my shopping list, okay? Because once things start to finally turn around, this is going to be top priority. But again, not there yet. All right. Any other questions you guys would like to go over? I am happy to do so. Let's see here. All right. Okay. If that's it, then if you could do me a favor, click that like button, share this video with a friend, and click that subscribe button. They seem corny, I know, to even ask, but they do help out the channel more than you can imagine. And if you do like this information, consider clicking the first link in the description. You get access, instant access to our weekly momentum stocks and insights, our weekly expected moves, numerous trade setups, insights on economic data, the market, and private Discord, all to help you along your investor journey. So consider doing that. I'd love to see you there. And for tonight, we'll wrap it up. I'll be back tomorrow after the market has closed to talk about what happened, why it happened, and what to expect next week, because tomorrow is the last trading session of this week. And then we're getting into when is the 31st? Oh, what date is the 31st? Real quick, let me. Where is it? Where is it? Oh, Monday is the 31st. A week from now. So we still have another week before it gets spooky. You are welcome. Thank you so much. All right. Thank you, ladies and gentlemen, for being here with me today. I greatly appreciate each and every one of you. Thank you for clicking that like button and sharing this video with a friend. And thank you for clicking the first link in the description. I greatly appreciate it. Have a wonderful evening, and I'll see you in the next video. Take care.